In the most recent years, a focus within trading education has often been placed on psychology. Traders are often advised to control their emotions, manage stress, and maintain confidence. And while these elements have value, psychology is not the most reliable foundation for decision making in the markets. Emotions are unstable by nature, and even with techniques to calm the mind, a poorly built framework of belief will continue to produce poor decisions. However, we can turn to something else, philosophy, because it provides a stronger foundation. Philosophy is not about mood or temporary feelings, it is about perspective and principles. It defines how a trader understands the market, how they interpret uncertainty, and how they position themselves within it. Where psychology seeks to manage emotion, philosophy seeks to clarify your vision. And your trading philosophy begins with core beliefs. What do you believe price represents? Do you see the market as random, as manipulation, or as human behavior expressed in numbers? What do you believe risk means? Is risk something to fear, or is it simply the cost of participation? What do you believe about your own role? Are you attempting to predict outcomes, or are you managing your probabilities? Without answering questions such as these, psychology alone cannot stabilize a trader. Breathing techniques or affirmations cannot compensate for a flawed philosophy. And there are several key pillars that illustrate the value of philosophy over psychology. Number one, acceptance of reality. Markets are outside of personal control. A philosophy grounded in acceptance prevents the frustration of expecting fairness where none exists. Number two, personal responsibility. Every trade is a personal decision. A strong philosophy rejects the impulse to blame external forces. Number three, time horizon. Philosophy forces clarity on whether a trader is seeking short-term income, long-term growth, or just skill development. Without this clarity, decisions will remain inconsistent. Number four, uncertainty as a constant. Psychology often seeks comfort in certainty, whereas philosophy accepts uncertainty and trains the trader to act despite it. And number five, your process over the outcome, as we all know. Results are shaped by probability. Good decisions can lead to losses, and poor decisions can occasionally lead to gains. A philosophy anchors evaluation in process, not outcome. And so philosophy then provides a framework through which psychology can operate. A calm trader without a sound philosophy will still make poor choices, but a trader with a clear philosophy may still feel fear or excitement, but those emotions no longer dictate their behavior or the choices that they make. And so while psychology focuses on the state of mind, philosophy focuses on the lens of understanding. And the first is temporary, whereas the second is durable. And a trader who builds philosophy gains stability that endures across emotions, market cycles, and eternal pressures. And for this reason, the future of trading education should not be built primarily on psychology. It should be built on philosophy, on principles and perspectives that give traders the proper lens through which to act.